Okay, this is a trade that I took yesterday. As a matter of fact, this was a trade I got into on September 30th. I entered the trade about 7 a.m. in the morning. This is the euro dollar against the British dollar. It's not the best trade in the world. I don't think it wasn't the best setup. It just it was something that I saw that presented itself to me, and I hope to make about 100 pips off the trade. And what I originally saw, I want to flip over to the daily here, and I saw a lot of sideways consolidation. Obviously, this thing is kind of going sideways, not really trending. You can see the moving average is just flatlining here, just really going sideways. And what I saw was this low over here. Let me blow this up a little bit so perhaps we can see it a little bit better. Saw a low being violated right here. And what I look for really, I look for these round numbers, obviously, support resistance, but what I'm seeing here after this low is that there isn't really anything that is showing up as a low, a support or resistance point going to the downside. The first thing I see as far as a support point is down here. It is way down here around 85.30. So if I measure this out down to 85.30, which would be my target, I've got 120 pips. So I'm thinking to myself, perhaps I can make 100 pips out of this, and just have a fairly decent trade out of this one little, make it a really short trade. And that's really what I did, and that's really what spurred me to get into this. And I was looking also at the FOSI. RSI is the blue line. The red line is the moving average of the RSI. And I really like this indicator. It shows strength and weakness in whatever pair. And it is also turning down. So I'm looking at this thinking, well, it's definitely weakening, and my chances of making 50, 100 pips are probably pretty good. Looking at the 4 hour, I'm looking at my channel breakouts. These are the Donchian channels here. And that's where I put my sell stop right here. You see we've got a cross of the 6 and the 25 moving average. That's what this is. The green line is the 25 moving average. The red line is the 6 period moving average. The blue line is the 150 period moving average. I like to base my trades depending on, I use this as a filter. I base my trades on which side of the blue line my moving averages are. So if they're below the blue line, I'm going to go short. If they're above the blue line, I'm going to go long. These are below, and you see we got a cross of the moving average. The short-term moving average has crossed below the medium-term moving average, or the 25-period moving averages. It hasn't broken out yet. We've got a cross of the moving averages, but we really don't have what I would consider a breakout yet. The breakout starts to happen right here, and these are lows from back here. But this whole channel is kind of comprised of all of these highs and lows. So what I decided to do, just using a little common sense, was place my sell stop right at this break of the channel. So my sell stop was placed at 86.54, and that's where I got filled. But this trade actually surprised me a little bit because I didn't expect that it would move quite like it did, and it really moved. And I was up 60 pips before I knew it. Originally, my stop was placed right here at this high. And let me measure that out for you. That's going to be about 85 pips. Now what I try to do as a guide, I use the ATR, the average true range, and try to take that and use 1 to 2 times the ATR, no more than 1% risk, 1 to 2% actually. I use a little flexibility there. 1 to 2% total risk in any given trade. So that's my criteria. My rule of thumb is to use 1.5 to 2 times the ATR. This is 3 times the ATR. If the ATR is kind of small at 30 pips, this is around 85 pips, close to 90 pips, almost 3 times the ATR. So really what I'm doing is doing 3 times the ATR, but it falls within my 1 to 2% total risk for any given trade at this point. So I'm okay with that. And what I want to do is place that stop at the high or behind the high, which is right here. And that's what I did. I placed my stop originally right around 87.38. But what you see here, I'm currently in this trade, and what you see here is this red line was my entry. Typically this line would be green, indicating an entry, but I've moved my stop down. So as soon as this trade has advanced 1 ATR or more, I'm moving the stop down to break even, which is what I've done here. And so I've moved my stop to break even right now. My first unit, which is 2 lots, I have secured the trade, and I cannot lose money in that trade. I'm going to, even if it goes against me on the first unit, I'm going to break even on that trade. But here's what I do. If there's room, if there's time available, if there's room for the price to move, I will compound into the trade. And I do that based on ATR moves. Every 1 ATR, I will add a unit. 1 unit is 2 lots. And based on the calculation that I use, I should make a video on the calculation, but based on the calculation that I use, 1 lot for me is, or 1 unit for me is 2 lots. So what you see here, this green line, is me adding another lot or another unit onto my trade. And I'm looking for it to run down to this low here. This is my target. I've seen this little sticky point over here. I'm very aware of that. I'm also very aware that this is a big round number at 86 over here. I basically entered right at the round number. These are commonly natural support and resistance points. Didn't feel very good about that, but I knew that I'd made some money on this, and I'd be getting out of this. If it did decide to bounce, I would just check out of it. I'd just punch out of the whole trade and look at it again next week. But right now it's actually looking pretty good. I'm waiting to see what happens on Monday, but I'm looking at this trade. I put this trade on the second unit. Whenever I do a second unit, what I will do is put on a stop at the original unit's entry price. So what I have here, I have 2 units on, or 4 lots altogether. My stop for both pairs is at 86.54, which was the original entry price, and I'm going to move that down as the price moves. So as the price progresses, what I want to see are those 2 stops move down to the entry price of the second unit. That gives me a completely riskless trade. I'll be in the money for 1 unit. I'll be at break even for the second unit, and then it'll just be a point of relaxing and seeing where it goes. I'll be moving my stops down accordingly. Typically with these moving averages, what I've been doing is using the middle moving average or the green as a stopping point. If it looks like it's going to go into consolidation or hit a support or resistance point, I'll sometimes tighten the stop up. But typically that's it. I'm just going to move the stops accordingly and let the price run. I like to make the trade as automatic as I can. You do have to manually move the stops and it does get a little tedious, but if you're making money in the trade, it's something that you can, generally is kind of fun to do, is to move your stops up or down, to lock in profits, even if you've got to do it 3 times. It's kind of fun to do. But in this, I try to make the trade sort of automatic, where I can set it and forget it. I get in on sell stops and buy stops. I move the stops accordingly, and almost every time I'll somehow, some way wind up getting stopped out of the trade. Very rarely do I ever manually hit the sell button or hit the close button and get out of the trade. But anyway, this is a trade that I'm currently in. I'm currently up about 70 pips in the trade, and I'm going to track this trade, and we'll see how it pans out. I'll do a follow-up video to see how this trade actually progresses for me.